that time of the year again. We're talking taxes, and today we're going to debunk 5 tax debt myths. So pleased to be joined by Blair Manton, once again, licensed insolvency trustee with Sands & Associates. Welcome back.
Thank you. Good morning.
Now, the first thing I guess people think about is, like, you don't have to file taxes unless you owe something.
Yeah, it's absolutely a myth, or if you can believe it, it's actually way worse to not file your returns than it is to actually have a debt with CRA. They look more negatively on those that don't fulfill their civic duty of filing a tax return, and it also can hurt you. Even if you don't owe money, you'll miss out on things like GST credits, tuition credit, tax carry forwards. There's just a bunch of reasons why you need to file your taxes every year, even if you don't owe money.
Okay, and how about when it comes to incorporating as a business? Does that help or anything like that? Does that clear everything out?
That's a common myth as well. People think, the reason I incorporate a business is to put some legal separation between me and my business operations. And that's good in theory, but you've got to realize the government has the ability to essentially frustrate that separation on a number of factors. 2 really big things. One is payroll deductions. If you have a business, you have employees, and you don't remit the taxes on their behalf, you owe that money personally, regardless of having the business incorporated. A second is GST. If you're required to collect GST as the business, if the business doesn't pay it, you as the owner will be held personally responsible. So it's false to say an incorporated business is going to protect you from all tax debt. There's a couple really important ones that would come through that.
Okay, and the other one, when we come to number 3, is just waiting. People think, maybe if I wait long enough, my tax debt will expire. Not really the case, though.
Yeah, I'm excited because a lot more people understand there is a statute of limitations for certain types of debt, but I'm discouraged in that it doesn't apply to tax debt. So people need to realize there's no means of waiting out the government. If you owe the government money, it's either now or later, but you have to come to terms with there's no statute of limitations. Leaving the country isn't going to get rid of the tax debt, so it's a debt that you have to deal with. There's no other way to come at it.
Okay, a couple more. We're debunking the top 5 tax debt myths. The other one as well is some people think only their employment income can be seized, but that's not the case either.
No, absolutely not. So I have people that phone me often and say, I'm on pension, or I've just got, some self-employment income. If I owe the government money, there's nothing they can do to me. Absolutely false. If you owe the government money, they have the right to take up to 100% of CPP, OAS, your standard pension income that no other creditor can touch. The government can absolutely touch. And if you're self-employed, they can even go one better. They can go directly to your clients, the clients that should be paying you money, say, you know what, you owe us some money, we're going to get your clients to pay you directly, thereby choking off your entire revenue source. So you need to be very careful if you've got a self-employed business or some income that you think is protected. If you've got a tax debt issue, there's really no income that's safe.
Okay, and the last one, when it comes to number 5, this is a big one, a misnomer. People often think that tax debt cannot ever be forgiven.
Yeah, people think there's no way you can make a deal with the government, and it's true. If you're negotiating, toe-to-toe with the government, they might give you 6 months to pay the debt off in full, but that's it. There's no reduction, there's no compromise.
Okay.
If you deal with a licensed insolvency trustee, we're the only folks that are able to eliminate or reduce tax debt in 2 ways. You can either file a personal bankruptcy, which will eliminate tax debt. It's a myth that it won't. It actually will get rid of tax debt. A second way, and what's more popular, is called a consumer proposal, where you say, I owe a ton of money, I'm going to offer a third back, a half back, a quarter back, some portion of the money owing with no interest, and you avoid a bankruptcy. So there are 2 ways to make a deal on taxes. The best way is a consumer proposal, and if that doesn't work, a personal bankruptcy is another option.
So there's a little room for negotiation there.
Absolutely.
Okay, cool. Great tips. We'll get these online. And where can people go for more information?
Yeah, at sands-trustee.com. We've got 19 offices in BC. Happy to help.
Awesome. Thanks as always, Blair.
My pleasure.